It's absolutely flat for the Nifty. 17,850 is where we're at.
Markets were absolutely flat on the benchmark index right now at 11 o'clock.
Nifty has recovered from the low, so it's down 15 points as we speak.
Actually, in many ways, what you're seeing now is pretty much similar to what we saw yesterday. Actually, even the levels are similar. You just go back and look at where the Nifty was at 230 and where the Nifty is now. We're closing above the 20-day moving average on the Nifty. So that is interesting because we closed exactly at the 20-day yesterday.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in just 5 headlines. I'm Ekta Batra. Here are the top stories for this evening. It's a volatile trading session which sees the Indian indices close with minor gains. The IT index outperforms benchmark indices marginally. The metal stocks remain a major drag. Double trouble for Adani breaks a 2-day gaining streak for the group stocks. MSCI says it will announce changes to the free float status of some Adani securities following the periodic review of its indices today. Additionally, France's Total has put its hydrogen JV with Adani on hold pending an independent audit. All group stocks close with cuts. Oil surges for the 4th straight day as the US Fed Chair Jerome Powell eases the market's rate hike concerns. Recovering demand in China also supports. Steady operational performance from its India ops helps Hindalco. Hindalco posts a strong Q3. Aluminium and copper EBITDA beating estimates. Trent also jumped 7% on strong retail sales, while a strong third quarter performance propels Cummins to life highs. Equity mutual fund inflows surged 70% sequentially to claim a 4-month high above the 12,500 crore mark. Large cap see a 700 crore inflow after 2 straight months of money moving out. The SIP contribution sets yet another record at over 13,800 crores. All right, well, let's tell you what we have lined up on the show for you in the next 30-odd minutes. It's a packed show as always. In Market Opinion, we have Sanjay Mukim of JP Morgan India and Big Corporate Voices. We have Nick Walker, CEO Cairn Oil and Gas, on its India plans. Let's kick things off with the stock market action. It was a volatile trading session which saw Dalal Street end with minor gains. The Nifty and the Sensex ended mildly higher. The IT index led from the front, while metal stocks remained a major drag on the Nifty. The broader markets underperformed with the Nifty Bank and mid-caps ending the day flat with a slight positive bias. Prashant Nair is here with the details.
A slightly higher start. I mean, marginally, you could almost call it flat on the Nifty, and same is true for the Bank Nifty as well. On the Nifty, by the way, we have managed to close above the 20-day moving average. It's a near-term resistance, but not by very much. It's not like a meaningfully higher close, but we'll see. Let me just tell you what happened. Sectors which were higher, IT, continuing from yesterday, picked up and did well, and banks did better as compared to yesterday as well. On the downside, metals flipped. Metals yesterday was a strong sector. Autos and real estate lost as well. On the Nifty, in terms of large cap stocks, names like Hindalco, the Bajaj twins have made a comeback. Actually, it's Bajaj Finance, which is slowly but surely creeping higher after a poor 2022. HDFC Life and Infosys, insurance stocks did well yesterday, and there was a little bit of a bounce continuation today as well. The cuts on the Nifty coming in from names like Hero, Cipla, JSW Steel, which were down and out. Lots of earnings-related reactions, right? I mean, both at the downside and the upside. So in the broader space, MRF, Page disappointed, Piramal Pharma, Raymond were names which were lower. The new age companies have been doing well. Paytm has moved up sharply very quickly. Policy Bazaar for a second day in a row. There was Cummins, which was reacting to numbers. Trent, Sula, Campus, these are liquid large mid caps which performed quite okay. I think a more solid and more convincing close about the 20-day perhaps will be something which bulls will welcome. But before that, I think we will get the MSCI sort of review of the Adani stocks and what they intend to do there. So I think those are the names which will be very much in focus as we start tomorrow's session. Back to you.
Okay, all right, Prashant, thanks very much for that. Well, in Market Opinion this evening, Sanjay Mukim of JP Morgan recommends that investors move their portfolios into large cap liquid stocks, adds that India continues to outperform other emerging markets.
India will probably need to go through another year of consolidation in 2023. Multiples for the index, multiples for a large set of stocks are still higher than average, still higher than where they were in December 2019. And as the growth momentum of the economy normalizes post the reopening bump that we've seen in 2022, you will need to start to consolidate into more average multiples. There is additional volatility, there is additional beta in the market. And our recommendation to investors obviously has to be to move portfolios to large cap quality stocks in India and avoid the mid cap, slightly less illiquid names. Technically, look, we've just about given up our outperformance over the S&P 500 that we earned last year. And through the last 14, 15 months, India is now on track with S&P in dollar terms. But we still retain significant outperformance over the EM index. So it is possible, just like I said, a very minor technical point, it is possible that India treads water for a little bit longer.
All right, well, let's get to the second headline now. This evening, the Adani Group stocks two-day gaining streak came to a halt today. This is after the MSCI said it may announce changes to the free float status of some Adani securities following the periodic review of its indices today. Additionally, France's Total has put its hydrogen joint venture with Adani on hold pending an independent audit. Vivek is here with the details on this story.
Well, that's absolutely right. The group continues to remain in focus. So on January 28th, post the fluctuation that was seen as far as the stock price was concerned, and also the various news flows that was coming in, MSCI had invited response as well as feedback from market participants as well as MSCI members as to how exactly they should use or see the weightage as far as Adani Group stocks in the MSCI Global Standard Index was concerned. Today morning, just prior to the expected release of the MSCI Feb Index Review, where they would be announcing the likely inclusions and exclusions, MSCI said that it has received the feedback, and most likely by today, you will see some action being taken by the MSCI in terms of the treatment of Adani Group stocks within the MSCI Global Standard Index. Now, why is this important? Now, remember, all of the Adani Group stocks, barring Adani Wilmar as well as NDTV, are actually part of the MSCI Global Standard Index, and in fact Adani Total, Adani Enterprises as well as Adani Transmission actually have the highest weightage as far as the MSCI is concerned, and these stocks, if they see a weight reduction, could see some outflow coming in on Feb 28. Now, the other important development that you alluded to is the fact that France company Total Energies post its conference call yesterday after announcing the results actually indicated that they had put on hold the expected $4 billion green hydrogen investment that they were going to put into Adani New Industries Limited. So now they've said that they're awaiting the audit results that the Adani Group has promised, and post which they will reassess whether or not to enter.
Okay, all right, Vivek, thanks very much for that. Well, sticking with Adani-owned stocks, Naveen Shahdio of Nuvama Institutional says that ACC and Ambuja are good bets from the medium to long term.
It definitely, did throw up a positive surprise both at ACC and Ambuja. I think operationally, they really have a lot of headroom to improvise further. And in fact, they also reiterated that the plans to double capacity in 5 years remains very much in fact. Details of that will be shared next earnings call. Definitely, there is value on the stock, despite assuming lower valuation multiples. Also, I'm sure there is value to be seen from a 1 year or a medium to long term perspective.
All right, on to the third headline today. Crude oil prices surged for the third straight day after the US Fed Chair Jerome Powell eased the market's rate hike concerns. Recovering demand in China also supported prices. Manisha Gupta, commodities editor, is here with more.
Oh yes, it's a fourth straight day of gains coming in for the crude oil prices, and even as the US inventories have seen strength for a seventh straight week, so much so that you have the US inventories now highest since April 2020. The markets are taking support from the fact that the Saudi Arabia has increased official prices to Asia for the first time in 6 months as demand continues to be steady. There is very strong demand coming in from China too, which can be shown or seen by the loading cargo numbers there. And then because of the earthquake in Turkey, you have seen the Cairn oil field continue to shut. There also are reports that BP's Azerbaijan also has declared force majeure on Turkish ports there. There are reports of shutdown in oil fields in Norway which have been supportive, and markets are taking cue from the fact that OPEC also has not touched the output for the next 2 or 3 months and have kept it steady at 2 million barrels per day of an increase going forward in rest of 2023. All of those factors continuing to support prices, especially after 7% of decline in the crude oil prices in the previous week. We are back nearly 6.5% in this week already on a firmer note.
I'm not in that camp of Uber bulls calling for $100 a barrel, and the reason for that is that I do not expect Chinese demand to come back, bouncing back so fast that it takes everybody by surprise, especially OPEC plus. Indian oil demand, first of all, Indian energy demand absolutely will continue to rise. Also, it's pure demographics, right? It's a country with a growing population, soon to be, unless it's already the largest population in the world. And also more urbanization, better standards of living, better expectations from people with regard to their lifestyle. So absolutely rising demand.
There's a lot of uncertainty, unfortunately. We have uncertainty on the demands, but if China does reopen and India's economy still continues to thrive the way it is, I think we could be in a situation where we're in a supply crisis in 2023. I'm afraid some people want to just pin the blame on Russia as the reason for the energy crisis, but I like to remind people that we were in an energy crisis even before the invasion of Ukraine. Now, certainly the Russian invasion of Ukraine has put added a premium to prices, but I think if we don't learn the lesson about a lack of investment in hydrocarbons while we pursue the energy transition, I think we're going to see high prices and volatility as the new normal. And this is something that really concerns me.
All right. Well, meanwhile, Manisha Gupta also spoke with Nick Walker, CEO Cairn Oil and Gas, at the sidelines of the India Energy Week. Commenting on India's oil demand, he said 30 years from now, 60% of India's energy demand will be met by oil and gas.
Oil and gas is going to be here for the long term, and if you look forward in 2050, so 30 years from now, still 60% of India's energy demands comes from oil and gas. But it's important that we do that in a responsible way. And so here at Cairn, we've set a target to become carbon neutral or carbon zero by 2050.
All right. What is the kind of conversation that you had at India Energy Week? Because I do understand that there are a lot of investment that are being talked about, collaborations even.
Yeah, no, we've got a lot going on. I think we've got a lot of opportunity to invest into our assets to support the energy needs for India, and I want to move those forward as quickly as possible, and we're focused on doing that. Particularly within our Rajasthan block is the near term. There's a lot of opportunity to continue to grow the resource potential there, but also within our exploration blocks. We've got a big exploration footprint. I'm quite excited by some areas, and if you look at India as a total, there's 30 billion barrels of yet to find in the basins that we've discovered so far, and actually a lot more in the basins that haven't even been explored. So there's a lot of opportunity here to grow the oil and gas production in India to support long-term economic growth here.
Nick, most people believe that the next 5 years are going to be crucial, even critical when you look at energy overall as a space. Cairn as a company, how are you targeting and shaping up next 5 years?
Yeah, no, our vision is to grow the business to be 50% of India's oil production produced in India, and today we're 25%, so we're driving towards that.
Any numbers that you can share with us on that?
No, I think it's a bit early to say how much we'll invest, but if you look back, we've invested around $3 billion over the last 3 years.
All right, time for a break now, but stay tuned. We'll be back in just a short bit with all of the other top stories. Welcome back. You're still tuned into markets today. Let's get to all of the other top stories that we're tracking. The fourth headline today is steady operational performance from its India operations helped Hindalco post what was a strong Q3. The company's aluminium and copper EBITDA beat street estimates. Nigel's here with a wrap on the company's performance.
Well, Hindalco's India business delivered its numbers and it looked quite good. Remember, the Novelis business was quite disappointing, so the street was pegging its hopes on the India business. And let's break this up into 4 broad points. One is the aluminium business. If you take that upstream as well as the downstream, put it together, well, on a year-on-year basis, it appeared a little bit disappointing, but on a sequential basis, those numbers improved. And the combined number between both of them was more than 1,700 crores, which was more than what the market was anticipating. That was positive. The second factor is the copper business, which is a smaller part of the EBITDA contribution, but that looked good as well, coming in at more than 540 crores in a single quarter, which was better than the 515 that we were estimating. High amount of value-added steel and better TCRC margins, that's what helped them, so led to the copper business doing quite well. The debt number was down marginally on a quarter-on-quarter basis, so that as well goes down positively. And finally, the street is anticipating a far improved performance in quarter 4. So put all these 4 factors together, explains why Hindalco did well.
Okay, all right, Nigel, thanks very much for that. Well, Cummins hit life highs today after delivering a strong third quarter driven by strong demand and healthy growth both in the domestic and export revenue. Net profit was up over 49% and revenue was up over 25% year-on-year. The company said it is on track to meet its FY23 revenue growth and is cautiously optimistic in the short to medium term. In addition, the company continues to be watchful on the softening in the capex cycle. The stock was up close to 7% today. Well, the other stock in focus was Trent. The shares surged over 8% after the company registered its highest ever quarterly revenue in the third quarter. Manglam is here with the details on that.
Well, good performance coming in on the top line from Trent. Remember, this is the company that runs all the West Side stores and the Zudio stores across the country. Also has a joint venture with Zara. So a big surge in their revenues is what we've seen. Over 54% jump. This, of course, comes on a low base and a high seasonal quarter. But, we did see some compression in their gross margins owing to the weakness that we're seeing in the input cost inflation environment, as a result of which the EBITDA has grown just by about 18%. Remember, same time last year, they had a lot of benefits in terms of rent waivers, etc. as well. All of that has come back in terms of expenses, as a result of which there has been some margin compression from 18% to 14%. The net profit, however, has grown by 36%, further aided by other income, which has doubled too. But importantly, the West Side same-store sales growth for the third quarter has been 17%, and that is what the street likes, notwithstanding the margins, notwithstanding the valuations as well. But valuations and urban slowdown may be a bit of a concern, and that's what Jefferies says too, because after this move today, the stock trades close to around 77, 78 times one-year forward price to earnings. It's off its 52-week high by almost 15-odd%, but then again, still at elevated valuations. Today, the street likes these numbers. Let's see when the valuations come in the way.
Okay, all right, Manglam, thanks very much for that. So that's on Trent. But on to the fifth headline today. Equity mutual fund inflows have surged 70% sequentially to claim what is a 4-month high above the 12,500 mark. Pavitra Parekh has been tracking this story. She's here with a wrap.
Mutual fund data for the month of January has come in and it looks up. It's above 12,500 crores, which is a sharp increase from the around 7,200 crores that we saw in December. In fact, if you take a look at this figure, you can see it's come in at a 4-month high as well. So there you have it on your screen. It's a 4-month high for the net inflows that have come in. A key positive this time is that the large cap funds have clocked in inflows of around 700 crores. Remember, this is after 2 straight months of money moving out of this category. So that is important to note. Let me move on to the debt category now. Outflows continue here. So the figure has come in at 10,300 crores this time, with around 5,000 crores being pulled out from liquid funds alone. Now, of course, it looks much lower if you compare it to the last month chart, but December is when we actually do see a lot of quarter-end activity by corporates, so that wouldn't really be a fair comparison. Do keep that in mind. That's why you're seeing that big sort of decline in the outflows. The hybrid category has seen a move higher this time as well, so we have a figure of 4,500 crores. This is versus the 2,250 crores that we saw in December. And a figure that's quite surprising is that we have a big ETF outflow number this time. So it's come in at 1,700 crores. This is versus the 8,800 crores of inflow that we saw this time. So that is quite a jump that we've seen. Now let me take you through the total AUM managed. That has come in at 39.62 lakh crores. This is for January, and in December we saw 39.88 lakh crores. So there is a little bit of a fall here, but I will end with some positive news. The SIP contribution continues to move higher. It is another month and another record there, and the figure has come in at 13,856 crores. So all in all, a good month for the mutual fund data there.
Okay, all right, Pavitra, thanks very much for that. In fact, we did catch up with Sunil Subramaniam, MD and CEO of Sundaram Mutual Fund, to make sense of this strong January data. Here's what he said.
I think a lot of NFOs, the mutual fund industry has been launching. So I think these NFOs have been garnering increasing collections because of the visibility, the advertising campaign around these things. That's number one. Number two is that the data for India has been robust and strong on the economic side. So domestic investors continue to repose faith because they see a good future. So all the uncertainty from mid-December, which has come from the FIIs booking profits and then the Adani-related selling by the FIIs, has not hurt the sentiment of the domestic investors. If you look at the allocation pattern, right, I don't know the data and the breakup, but generally this is the tax season. So ELSS funds typically see an uptick.
Okay, well, that is some opinion with regards to the Amphi data that came out for the month of January. But before we wrap, we at CNBC TV18 would like to thank you, our viewers, for your sustained support, trust and loyalty, especially when it comes to the coverage of big events that shape and determine how you handle your personal finances and your businesses. Thanks to your unwavering patronage, CNBC TV18 has once again crushed competition on Budget Day this year. Your channel has enjoyed a solid 89.9% viewership through the day. That's not all. We have also emerged the leader in the business news segment with 88.2% viewership hearing the Finance Minister Nirmala Sitharaman's budget speech. Again, this feat would not have been possible without your consistent support, engagement and steadfast trust in us. My team and I thank you all for giving us this opportunity all year, every year. It is truly a huge moment of pride for all of us here at CNBC TV18. Thank you all for the privilege of letting us deliver the news that matters to you with the analysis and perspective that makes a difference to your life. With that, it's a wrap on this edition of Markets Today. Thanks very much for watching.